OPEC Plus has opted to leave oil production quotas unchanged.
The Organization for Oil Exportation says it's cutting production by 100,000 barrels.
Imagine waking up one morning and seeing your gasoline bill spike. You didn't drive more, but the price shot up anyway. Behind that sudden jump isn't just market whim or greedy traders. It's something far more influential, deeply political, and surprisingly strategic: OPEC. This organization and its broader alliance known as OPEC Plus decide how much oil flows into global markets. Their moves ripple through economies, fuel inflation, and can even sway elections. So what is OPEC really? A cartel? A stabilizer? A political heavyweight clad in suits and Arabia dates? Let's unpack it. The beginnings: why OPEC came to be. 1960-1970. In 1960, 5 oil-rich nations, Iraq, Iran, Kuwait, Saudi Arabia, and Venezuela, felt suffocated by Western oil giants who dictated prices. These multinational companies, dubbed the Seven Sisters, set oil rates without consulting the countries pumping their oil. Weakening colonial ties and surging nationalism led these 5 to meet in Baghdad. The result? OPEC, formally established in January 1961 with a mission to coordinate oil policies, ensure fair pricing for producers, and secure reliable supply for consumers. Soon, more countries joined: Libya and Qatar in 1962, Algeria in 1969, Nigeria in 1971, and others over the years. Though some members, like Ecuador and Indonesia, exited and re-entered multiple times. Angola withdrew recently in 2023, and
Angola is quitting the Organization of Petroleum Exporting Countries after disagreement over its production quota.
Ecuador left again in 2020. By the late 1960s, OPEC played spoilsport to Western pricing power, setting posted prices that protected national oil revenues, even if internal coordination was still shaky. Who's in and who's out? Fast forward to today. Official OPEC has 13 members drawn from the Middle East, Africa, and South America. The original 5 plus Libya, UAE, which assumed Abu Dhabi's seat, Algeria, Nigeria, Ecuador until 2020, Gabon, Equatorial Guinea, and the Republic of the Congo. Membership has been fluid. Qatar quit in 2019 to focus on exporting natural gas. Indonesia suspended and rejoined briefly in 2016. Angola exited in 2023 due to quota disagreements. Then there's OPEC Plus, launched in 2016, which brings in allies like Russia, Mexico, Kazakhstan, and Oman. Together, OPEC Plus accounts for roughly 41–42% of global oil production. Enough to move markets decisively. How OPEC operates. The real power game. Members meet semi-annually, usually in Vienna, to set production quotas. This isn't bureaucracy. It's high-stakes poker. Countries come with different cards: massive reserves, tight budgets, political unrest, or social spending needs.
OPEC, the Organization of Petroleum Exporting Countries, has announced it will cut back production by 2 million barrels a day, a decision that could be devastating for gas prices here at home.
OPEC's goal? Balanced supply. Too much oil, prices crash. Too little, inflation and supply shocks erupt. Quotas adjust the tap accordingly, but quotas are voluntary. And non-compliance is a chronic issue. Iraq, Kazakhstan, and the UAE often produce above their quotas to meet financial needs. Enter the JMMC, Joint Ministerial Monitoring Committee, a watchdog entity, not decision-making, but critical in monitoring member compliance and market trends. Is OPEC a cartel? The great debate: cartel or not? On the surface, yes, it fits the economic definition: coordination to influence prices. But OPEC counters: it's stabilizing markets. Critics counter with history. In 1973, Arab OPEC members cut supplies to the U.S. and its allies during the Yom Kippur War.
We are heading toward the most acute shortages of energy since World War II.
This turnpike, usually crowded with trucks and automobiles at this time of the year, is practically deserted.
Oil prices quadrupled. Shortages, inflation, a global energy crisis followed. In the 1980s, rivalries, notably the Iran-Iraq War, sapped unity. Saudi Arabia opted to defend market share, not prices, pumping heavily and crashing oil below $10 a barrel by 1986. Decades of ups and downs followed. Today, some argue OPEC is a toothless tiger, Others say it's the most effective cartel in modern energy. Truth lies somewhere in between. It acts when aligned, not when fractured. 2025, a turning point in oil strategy. By early 2025, OPEC Plus had extended existing cuts, about 5.86 million barrels per day.
OPEC Plus have decided to extend production cuts that were announced last year until 2025. In a statement released on Sunday, the group declared that the cut of 1.65 million barrels per day,
representing roughly 5 to 5.7% of global demand. But as demand softened and inventories rebounded, OPEC Plus pivoted. Starting April 2025, voluntary cuts were phased out gradually from 2.2 million BPD by end 2026, triggering price pressure. Markets reacted sharply. Brent crude dropped to the low 60s barrel with WTI near $67. Analysts cut forecasts. Barclays revised Brent to $66 average in 2025, $60 in 2026. Saudi Arabia signaled a strategic shift, willing to accept lower prices to regain market share, acknowledging non-compliant quotas from other members. Summer 2025 saw further increases, 548,000 BPD in August, driving gas prices down in the U.S. as global fuel supply eased. Despite the price drop, Kuwait's oil minister stressed confidence in fundamentals and support for OPEC Plus efforts, despite the fiscal hit. Geopolitics and risks, Iran, sanctions, and the Strait. Geopolitical risk is always lurking. In June 2025, Iran threatened to close the Strait of Hormuz, a choke point handling nearly 20% of global oil.
And as Eric mentioned, the Strait of Hormuz may close, and in fact, oil futures are spiking in reaction to the turmoil in the Middle East, and investors do fear that Iran would disrupt what is global shipping via the Strait of Hormuz.
In retaliation against escalating regional conflict. A closure could spike oil as high as $150 a barrel. Meanwhile, U.S. sanctions, especially threats against Russian oil buyers, created new market volatility. In July 2025, oil surged 3%, with potential ripple effects if sanctions cut off export outlets like China or India. These flashpoints underscore OPEC Plus's dual role, balancing output and watching geopolitical fault lanes. Future of OPEC, can it stay relevant? The Organization of the Petroleum Exporting Countries, OPEC, has long been a central force in global energy markets, but its future relevance is facing unprecedented pressure on multiple fronts. First, the rise of non-OPEC oil producers is steadily eroding the group's influence. The United States has cemented its role as the world's top oil producer, pumping over 13 million barrels per day by 2025. Meanwhile, countries like Canada, Brazil, and Guyana are ramping up output, further diluting OPEC's control over global supply and prices. As demand continues to grow outside OPEC borders, the group's market share is shrinking, quietly but consistently. Compounding this challenge is the accelerating global energy transition. With electric vehicle, EV, adoption skyrocketing, and investments in renewables reaching record highs, oil demand is no longer infinite. According to projections, global oil demand could peak by the late 2020s, and EVs alone might eliminate 600,000 barrels per day in demand growth by 2026. That's a direct hit to OPEC's long-term business model. Perhaps most critically, OPEC faces internal fractures. Member states no longer share aligned priorities. Some, like Venezuela and Nigeria, desperately want production quotas raised to boost revenues. Others, like Saudi Arabia, prefer volume control to maintain higher prices. This divergence leads to quota cheating and non-compliance, which undermines the group's very coordination. In response, OPEC is trying to adapt. Some members, particularly Saudi Arabia and the UAE, are diversifying aggressively into tech, tourism, and sovereign wealth investments. But others remain heavily dependent on oil. Whether OPEC can stay relevant hinges on its ability to modernize, coordinate, and coexist in a world that's moving away from fossil fuels faster than ever before. Why it still matters: oil, economy, and everyday life. OPEC, and now OPEC Plus, may sound like a distant geopolitical acronym, but its decisions ripple straight into your wallet. Every time you fill up your gas tank, pay an electricity bill, or see a spike in grocery prices tied to transportation costs, chances are OPEC Plus has had a hand in it. Their production choices affect global oil supply, which in turn drives fuel prices, shipping costs, and broader inflation. Even a slight shift in OPEC Plus output can add or remove billions of dollars in economic pressure around the world. This is especially critical for oil-dependent nations whose entire fiscal structures hinge on stable oil prices.
Countries have been suffering problems since mid-2014 on the back of rising deficits, currency depreciations, and debt crisis due to low petroleum prices. Analysts say the problems are pushing some of the countries to diversify their economies.
A sudden crash in crude can devastate national budgets, while a price surge can spark inflation crises in import-reliant countries. It's a global seesaw, and OPEC Plus often sits at the fulcrum. Even in an era of rising renewables, oil remains the lifeblood of transportation, manufacturing, and petrochemicals. We're transitioning, but not fast enough to sideline OPEC's influence. In moments of global disruption, wars, sanctions, pandemics, or natural disasters, it's often OPEC Plus's ability to cut or boost output that helps rebalance fragile markets. Think of OPEC not as an outdated cartel, but as a giant, invisible hand on the world's economic thermostat.
Africa recovery, anything above 80, it will really hamper the economic growth.
Turn the dial one way, and economies overheat with high prices. Turn it the other, and budgets freeze in the cold. Until global energy systems truly transform, OPEC's grip on oil means its grip on everyday life stays firm. So next time you see your gas or energy bill climb itself, remember, it wasn't just runaway demand. Somewhere, governments met. Papers were signed. Production quotas adjusted. And global oil, that lifeblood of modern civilization, bent to their will. That's OPEC, messy, powerful, often misunderstood, and still very much in control of how oil shapes our world. If this unpacking helped you see the invisible gears behind those price tags, hit that like button, subscribe, and ring the bell so you don't miss more stories on finance, geopolitics, and global energy. Drop questions or your take in the comments. We love hearing what you think. Thanks for watching. Stay informed, stay curious, and remember, the world runs on more than just fuel. It runs on who controls it.